Hey everybody, happy Tuesday. Welcome back to the final hour. It is December 3rd, 3 p.m. Prices, again, pretty quiet on the day. Grabbed a little winner on the SPX this morning, grabbed a little winner on the SPY today. Added a few trades. Trying to think. Added a trade on DG for Dollar General with an earnings play this week. Added something on Nvidia for my double up alerts. Added Walmart for double up alerts. Added another SPY out to Friday. Same thing on the Qs. What else? Trying to think. I still have the ES hedge running. I think that's about it. I had a somewhat active day. I was going to roll a call on Apple. I've got a 230 covered call. We're trading at 240. If I roll it out by another week, I could get another dollar out of it. Honestly, it's probably not a bad thing to do. I think I will do that now. So if you're out there, type in a wire yes, everything's coming through loud and clear. Good afternoon, traders. I had some peeps joining yesterday, tuning in with the hashtag Algo Conference. So I wanted to make sure I shared my Discord channel as well as my Telegram channel if anyone wants to join or for some of the free trust content I threw out there, every single day. So I will post those links. Let's do Chris Pulver Trading Discord and find the link to that right here. This link will expire in a week, just so you know. So let's go to Chris Pulver Trading, invite, copy. There is for my Discord channel. Just a quick disclaimer on the Discord, I don't send private messages. I don't send friend requests. So when you come into the channel, just make sure that you are communicating to me and the group. Everything is just an open public channel for free group chat, Forex, stocks, options, futures, crypto, my blog, my analysis, private instruction, affiliate links. It's just one place to put all my content, all my links, all my education. That's what my Discord is for. I don't want it to be like sub threads and sub threads, and it's a pain in the butt to monitor that way. So I just make it so it's everyone can talk. So if you want to find me, you can find me every single day in the public forum. So there's no private messages unless you want to message me, then we can talk. But I'm not going to initiate and I'm not going to send in friend requests, just so you know. So that type of suspicious activity, please make sure you report that. You can ban any type of crap like that happens. Discord channels right here. Let me find Chris Pulver Discord and add the link. There we go. Let's go Chris Pulver Trading Telegram. Links are posted right there. And are welcome to join. I have a webinar today at 4 p.m. I have a masterclass for my double up alerts and liquidity levels at 5:30 p.m. The plan of action today will be to discuss the core strategy, options overview, and then management best practices. The alerts can go out within like 10 seconds of me placing the live trade. Same thing with closing trades. The trade I was in earlier this week was a 14-cent debit on a butterfly spread. It's not even close to my strike price, but I still closed out for about a 28% gain. But if it was to creep up, late in the day, this final 50 minutes of trading, if it creeps up to 605, there's a way this probably trades up towards maybe 80 cents to a dollar. But that's the hardest thing to do in a butterfly spread is pin that price at, this would be a 605 pin price right at closing bell. Virtually impossible to do that. Obviously, with something like the SPY, there are shares attached to this one, so I tend to manage these trades moving forward. Okay, what's happening, Keith? KOLD. Throwing out some pretty big numbers there. Another trade that's looking pretty darn good is WMT. I've got a liquidity level at 95 that I'm targeting, and so far we're creeping up towards that level. So if we hit there, that's awesome. Close up some nice winners on WMD. That's an expiration for this week and for next week. KOLD. You are short natural gas. I see. So you're looking at the drill baby drill concept. Just be careful on the long-term holds, man. If this is a levered ETF or leverage ETF, or a leveraged instrument for that matter, just be careful. These things get repriced all the time. So not something I'd be looking to hold longer term. If you got some good chunks, that's great. Up 18%, good. Looking to protect some gains before this thing chops around or before you start to see some type of repricing in this leverage ETF. So just be careful on that. Same thing if you're leverage ETFs on the inverse ETFs with the S&P 500, for example. I think it's like the Nasdaq is SQQQ. There is I don't even know what they are now. There's like 40 of them that I followed for a while. Traded them a little bit here and there, but I just rather trade options on futures. I'd rather just buy puts and do debit spreads and just trade the underlines that are way more liquid and not look to have anything hold long term or just be long or short volatility. So, all right, where are we at for today? Pretty quiet on the day overall. Here's the SPX. Started out pretty choppy. We're at the same high and low essentially as yesterday. So 2 days of some chop trading. We did have job openings this morning that came out slightly higher than expected. So here we are for Tuesday. Came in 7.74. We had a revision from 7.44 down to 7.37. Tomorrow morning we have Well, I guess tonight Eastern time, or Asia session in the morning, 7:30 p.m. Eastern time, or New Zealand trading time. You got GDP for the quarter. That is for the Aussie. You've got commodity prices out of New Zealand. You got Governor Orr speaking from the RBNZ. Wednesday morning, we've got the ADP non-farm numbers out of the U.S. Again, forecasted 152. We'll see if it's higher or lower. Maybe that's a bit of a preview to what we're going to see on Friday. ISM services number. So we have manufacturer numbers that came out already. We have a services number that come out tomorrow. We have Fed chair speaking at a little bit of it's the Deal Book Summit for the New York Times. Probably not a big event there. Thursday, unemployment claims for the U.S. Friday, CAD employment as well as non-farm. We're forecasting 218,000. Previous was 12K. Obviously, I'm wondering if that revision is going to be positive. Unemployment rate at 4.1%. We'll see what that total looks like from average hourly earnings to the non-farm numbers to the unemployment rate on Friday. Does that get the market moving at all to the upside or downside? Plus, we have consumer sentiment at 10 a.m. Eastern time. Papa John, did you send me an email? Or not an email, did you provide me with, let's see. Let me take a look at the Discord message here. Yeah, just send me an email so I can have customer service look into that stuff for you. Looking for that for you. Let's see, MRVL earnings after market today. Marvell Technology trading up to 96. We've been on a little bit of a hot streak. Came back to recent highs. Okay, that's a nice little rally. We are up about 180% from the 2022 lows. And nice little comeback. Now I got to wonder, is this thing MRVL? Semiconductor Solutions, of course. So fundamentally, I don't love this with a discounted cash flow. Doesn't mean that I want to short it necessarily, but I would say maybe I don't know. I would expect there to be some pullbacks coming sooner rather than later, especially after this recent jump. I mean, this was a August 5th bottom. This thing has ripped higher about 86% since August. That's a heck of a gain. So anyway, we do have earnings. It's today after market. Earnings trend for the most part looks pretty positive. Positive. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We have 11 of 14 positive earning prints. But you can tell that sentiment matters, because even with positive earnings prints here, the market was still down. Even with negative earnings here, the market was sideways. Positive earnings here, even negative earnings, it still didn't really matter. So overall, if semiconductors are in a pretty good place and it continues to be a storied sector or storied stock market where anything in the semiconductor space does pretty well, I would like to see some dips and pullbacks in order to establish some positions. So I do have some NVIDIA longs right now. They're mainly spreads. It's a debit spread, credit spread. I've got a couple of smaller time frame trades running. I don't mind taking some ownership of NVIDIA. The premiums are pretty nice, and I could work the cost basis down and allocate, $7,000 in margin to hold some shares and work the cost basis down a little bit. But I would just try to look at it like a fairly inexpensive income play. I'm not looking for, oh my gosh, NVIDIA is going to go to 1,000. It's like, yeah, it might, but I think I could see us pulling back to this 200 EMA first, trying to find these low 100s, or if we get back up into, struggling between let's say 130 and 150, just having a range trade on NVIDIA is also a possibility. So I do have a nice level at 141 this week that I'm watching to see if we can get hit. So 141 on NVIDIA, watching that price level. SPY still watching the 605. And the QQQ still watching the 520 level. That's starting to light up a little bit more for me today, which is nice. I'm holding that through Friday. See if we can get a nice little pop and rally towards the rest of the week and finish on a Thursday, Friday run. So we will find out. All right, we got the SPY, we got the Qs. The Dow is sideways. The Russell is down slightly. Probably some more volatility ahead. Actually, I wouldn't mind looking at, let's say we get some choppiness on the Russell. We pull back into these moving averages. I wouldn't mind establishing some 111 trades on the IWM or even the IWX. So IWX is the top 200. Same type of thing if we have some pullbacks. This one has blown through the all-time highs, unlike the IWM. So I think this one is just better suited for kind of the a little bit more concentration. This is essentially the top 10% of the Russell. And if we have some pullbacks, I'd like to scoop up what hopefully is some pretty inexpensive growth opportunities. And how else could I play this? We're sitting here at, recent all-time highs, recent all-time highs, recent all-time highs. Those all look the same, just trading Russell and futures. Volatility index down to 13.35. I will probably get long vol. I have a chart alarm set at $12. I'm going to change this to like 12.15. Just move that a tiny bit higher. I would look for probably a 60-day to 90-day out of the money call and just be long vol through probably March or April of next year. It could be shorter term than that. I mean, I could pay a little bit more time premium, but I just want to see, I don't know, it just depends on what we get price wise. If I get a movement to, let's say I position for this when we're in the 12s, and then we get a move up towards 16 or 17. I mean, percentage wise, that should be enough to get me a positive run on some call options. That's about a 38% move. So we'll see. But I'm going to be patient. I mean, this holiday melt up could just continue to be the exact same thing, which is slow and steady, very quiet, subtle all-time highs in the S&P. We're hanging out around 26 to 27% year-to-date performance on the S&P, about the same on the NASDAQ. Dow is underperforming that slightly. Russell has come back in a big way for a catch-up trade. Let me go back to this chart here on the IWM. IWM year-to-date. Let's go back to the measurement for January. So it'll be right in here. It's like we opened right there. We have seen upside of about 22.7%. We're sitting up around 20% right now on the Russell. So there's still some catch-up potential. I'm just looking to see if we pull back, into these moving averages, and then we keep going slightly higher. You're looking for that type of choppiness. We're making higher highs, higher lows, higher highs, higher lows. So see if there's some additional dip and pullback potential on the Russell to participate in some type of, I would just trade probably credit spreads, maybe a 111. If we get a pullback into here, maybe a 111, maybe a ratio spread on the IWM. I currently own some shares around $200, and my covered call's at 225. So I'm not going to touch that right now. I could roll it, but I don't really want to go out past end of December, early January. and that's hopefully going to be $25 a share when it's all said and done. And I think I paid like $12 for that, so should be a nice little return on capital. What else do we have here? Dollar index. Dollar index is flat on the day. Still watching this dollar index closely to see, if I'm selling the dollar index, I would want to see price breaking to fresh lows. I don't like selling the dollar. I don't like buying the dollar. I'm just patiently waiting. The only currency pairs that I really like right now, as far as the dollar, is I'm currently long with some small trades on the Aussie dollar. I'm currently long with some small trades on the New Zealand dollar. And I am long on the dollar CAD. So I have a small position on pound dollar, but I do have a stop loss like pretty tight to current price. Euro dollar, I was looking to get in around the 105 handle. I didn't. I like the Aussie and the New Zealand dollar setups better. So I'm not in the dollar yen. I'm still holding long for positive swap on the dollar Swiss. But basically what I'm saying is I don't know if we're forming a top right now in the dollar. I could see this area getting noisier, similar to what we had right here, similar to what we had right here. Right? So if we just have a range opportunity, I'm looking to see, does this actually form a top? If so, does the structure break back down, give us a weaker dollar? Stock market going higher, I'd look for a weaker dollar. It would be a little bit more perplexing to see the dollar going higher and the stock market going higher and gold for that matter going higher and Bitcoin for that matter going higher. That's usually not the way the correlations are working. So I just want to be mindful of, not calling tops and bottoms at this time of the year. What the markets typically put in motion tend to stay in motion. So if the dollar is going to be still, maintaining some of this strength that we saw since September, I don't want to be the one to, call the top and fight that. So dollar CAD from Shanks, I am long dollar CAD. I'm long dollar CAD trying to target 145 to 146. I'm in with some small trades. I'm looking to scale into it. I would stay bullish as long as we stay above 138. And I'm looking to stack up some orders and see if we get to 144.50 to 145. My measured move is up to 145. There's previous highs back into like the, I can just look at it right here. I'm trying to think when those previous highs were. Previous highs go back quite a ways year-wise. I mean, this is 2020 and this is 2016, and that's all the way up towards 146. So the measure move that I have here is based on the multi-year range from roughly 2022 to now, and I'm looking to see if we just continue to push slightly higher into that measured move right around 144.90 or 1.4490. So I'm looking to stay long on dollar CAD. Oil, hanging out at these support levels. I wanted to see, I do have some profit running. Let me check on my CL position here. So if I go trade history and /CL, and I go year to date. So I have the 69 by 68.50. That's a bull call spread. And I paid 23 cents for that. Paid 23 cents for that. So I'm looking for 23 cents. I'm trying to think of the multiplier here for crude oil. I think it's around, let me check, /CL. I don't know if it'll pop up in the right-hand corner for my activity. It doesn't. 346 and 349. Let's see what 0.03 is. So if I go to trade, bull call spread, so 0.23. Okay, so I'm paying $230 for a profit of $270. I need price to stay above 69 by my expiration. And the expiration is by January 15th. So if oil is above 69 by January 15th, I make $270. Right now I'm up $50. I'm up a portion of that. So I'm not going to close it right now. I'm just going to let price do its thing. But we'll see if this floor continues to hold on oil. Gold is essentially fallen asleep here the last, maybe 7 trading days or so. We have 1, 2, 3, 4, 5, 6. We have 6 days of very tight. Almost nothing has happened in gold. So I'm not saying it's a big nothing burger. I'm sure there's going to be a move that happens sooner or later, but I would just watch this area for some type of breakout, whether it's bullish or bearish. I still like gold potentially coming back with a pullback. I'm not going to short gold. I'm just looking to buy it at a lower price. So if it's high, low, lower high, lower low, I've said this the last couple weeks now. I've got a 200 moving average. We've got a decent bar count stretched away. We have a decent percentage stretched away. And also this 2500 by 2400 zone would be a spot that I want to start reestablishing some gold long positions. So summary on gold is nothing to really do right now outside of just wait. If price goes a little bit lower and carves out a fresh low, I'm looking at that as a corrective pattern. High, low, lower, high, lower, low. Start establishing some lows, look for some trend line support, look to see if price gets, perhaps below the 200 moving average and then back above it and then establish some long positions. I don't think that's a bad spot to be looking to get long GLD, for example. So I still like gold, medium to long-term bullish. Silver, nice little pop up on silver, pretty well supported dynamically with these moving averages. So I've got the 100, the 144, and the 200, and I'm still long. I'm looking at a measure mover on 35.86. Looking at SI for futures, looking at SLV, same thing. Did some credit spreads, added some shares. Bitcoin trading at 95,300. We're still wondering if we hit 100K. If then, if that happens, then what? Are we hitting symmetry at 107 to 108? Maybe. I'm just going to stay long and keep an eye on this one. Ethereum's been coming back pretty nicely. In fact, Ethereum's been, let's go to the chart, BTC ETH. This has actually been a nice little response to Bitcoin's rally, is showing that Ethereum is playing a little bit of catch up now. So I needed Ethereum to stay above around 2,800. And it broke out nicely. This is where I wanted to see price come back above, and it did so. So we break, retest, or break, pause, and we're making higher highs and higher lows. If we continue to rally up here towards the May and March highs of this year, that's looking good for Ethereum. I'm long with some ratio spreads as well as credit spreads on EETH. I need to stay above $60 and $55. If it does that, that'll be full profit on a couple trades there. Copper, nice little rip on copper to the upside. Still going to stay out of this for right now. Let's keep a close eye on copper, though. I think this one, from that standpoint, looks pretty good. I can go out to a farther out time frame, get some more perspective here. Copper, maybe something like that as well. Just a big channel, something along those lines, right? So, I mean, if copper comes back into the 2022 lows, or certainly back into the COVID lows, to me, that is bargain shopping like no other. I mean, I would be long copper for, a year or two. If we stay in the middle of this, yeah, we could go up. I mean, I think we could stay bid. We could go up. I do think that, they call it Dr. Copper for a reason. It's supposed to have a PhD in economics and geopolitics. So basically, if the world is growing and there's infrastructure spending, then usually copper benefits. If there's home building, copper benefits. If there's this whole AI race and AI infrastructure, copper should be demanded, right? There should be pretty steady demand on copper, but I don't know. I think price leads the way. If we have a slowdown globally, if we have a slowdown, maybe all the spending that we're seeing in CapEx spending for the AI race and kind of the arms race, if that slows down, I could see copper slowing down with it. So I'm just going to pick the old battles wisely on copper, kind of wait things out a little bit. 6J is Japanese yen. I was hoping this would come back down to revisit these lows to get long. I'm not doing anything on this for right now. I just wonder, I mean, what would be the risk if I did 6J right now and I took this out to January? Let me check expiration here. If I went to January 3rd, that's too early. February. Let's find out if I do a bull call spread. So I could pay 275 or risk 275 to make 350. If I move this strike up, I risk 250 to make 375. It's about the same. So this play would be, okay, if the Japanese yen gets stronger by the end of the year into January, February, then, I mean, reward to risk wise, if I made 350, risk 275, that's 127% return on capital. It's not too bad. It's not necessarily a technical spot that I would say I'm going to get long the Japanese yen, So let me go back and see what expirations I can work with. I can work out to June of next year. And I don't have a pulse on the Japanese yen. So If it comes, this is the Japanese yen futures feed. If it comes back into, maybe a little reversal pattern like that, then perhaps I can get long. If we come back into these lows again, way more interested in getting long, and even like stacking up or staggering some expirations on that. I just don't see the trade right now. So that is that. Nikkei, would like to participate in some upside on the Nikkei. Let's see here. I mean, we've been just dead sideways right back at equilibrium after that big July to August drop. FXY, EWJ. Ooh, this isn't a bad one to play. Could we go higher on EWJ? So this is Japan Focus ETF. Excludes the bottom 15% of Japanese companies by market cap, which tilts it slightly larger than the broad benchmark. Well aligned with the Japanese stock market. I actually think that long. How many shares could I buy for $1,000 or $1,500? I don't mind this exposure. This is a non-US play, but 1,000. Let's go $1,500 minus 71.64. I could buy about 21 shares right now. If we got back to all-time highs, that should bring EWJ with it. So an 8% move on the index. FXY I did, DXJ 111. Yeah, I'm going to take this trade. EWJ. I'm going to throw in some shares on EWJ. We have previous highs back here in September of 2021. Percentage-wise, I mean, it's not a huge upside there. I was trying to think. If I go 1,500 now, I think I would do something like this. If I did 1,500 now, and if we pulled back to revisit that August low, I would say position 1, position 2, make it equal weighted dollar amount. So that would be my break even. And if we get back, to these highs or these highs, that should give me maybe 10% or so return. I'd obviously like a little bit more leverage than that, but that would be around a 12% return on capital. I don't know. It's not great. I'm just wondering if the Nikkei, after floundering around, is going to pick up some steam to the upside. So anyway, I'm going to toss a trade at it. So EWJ, I'm going to get long, and I'm going to put in another order down here at 62. So I can get 21 shares right now of EWJ. EWJ. This is some non-US exposure. I'll throw in $1,500. So let's do long stock EWJ. I'm going to throw in 21 shares at 71.60. Should come out to about $1,500. Okay, so let's toss that in. So filled there for 71.59. Next. Okay. Let's go. Okay, a couple more accounts here. All right, and then I'm going to put in a pending order. We had lows around 61. I'm going to buy it at 61.25. Let me zoom in there. That low is, yeah, I'll go 61.10. So what's another $1,500 divided by 61.10? I can go 24.5 shares. I'll go 25 shares. So now, similar, 25 shares at 61.10. Make this a pending order. There we go. Okay. All right, almost there. All right, I'm going to add that to my EWJ. Buy shares. Okay. At 71.59. At 61.10 pending. Okay, so that trade is in. Add that into my Pulver alerts. That's going to be an index trade. EWJ. So this ETF focuses on 85%. $71.59. 25 shares at 61.10 pending. Okay, and then throw in level 1 right there, level 2 right there, level 1, come on, dude. All right, we'll go level 2 here. Level 2, $1,500 purchase pending. Okay, trade is in. Little non-US exposure, EWJ, DAX. What? Germany making some new highs. Good for it. Okay, and I'm guessing the FTSE's right along there. Yep, gosh darn, that FTSE was such a good trade right around that 200 EMA. Do I have any UK traders that were in this? Anybody long the FTSE? I wasn't sure how to trade this, but I wanted to get something right at this trend line and right around that that close above the 200 moving average and see if we rip back up towards these highs. And we did. So if anybody was following along, that turned out to be a pretty good trade. That's up around 3.25%. But powerful thing about options is if you can trade it. That worked out pretty nicely. Henseng pretty flat. EWZ, that's Brazil. This thing's still sideways. I might have to keep a close eye on this one. I did purchase some EWZ. EWZ, that is a Brazil ETF. I do have some shares of this. EWZ is right here. Yep. So a little bit of purchase. 20, 27.87 and $30 are trading at 25.36. This is probably going to get hit a little harder into the. I mean, if commodities aren't really showing a lot of strength, we might come back into this COVID. I would say this 21. Let's go 21.50. If we hit that level, that is COVID lows. I would probably throw another chunk of shares at that. So between 2016, 2020, I would get long there. Let's say I own it at 30, buy some more at 21, gives me a break even around 25, 25.50 or so, right? So buy it at 30, buy it at 21.50, divided by 2, $25.75, and I would just range trade this thing towards like 35 bucks. So if I can flip this for holding it for $8 to $9 a share, dividends pretty solid for ownership at 8.25%, 8.5% actually. So anyway, set a chart alarm to see if we get some COVID lows, and I'll add another chunk there. All right, what else? Mag 7, Apple fresh highs 242. Good on you, Apple. Amazon at 212. Let's see if we can crack some highs at 215, almost 216. Google, got some credit spreads in on Google to 155 by 160. I've got a ratio spread as well, willing to own the shares. I think I put that trade in today. Yeah, I was going to say I was looking at ratio spreads. I was looking at 111s. I like owning this. So the break even here, if I did take ownership on the ratio spread, would be like 143. That would be below this nice little September bottom. So I'll see if I can just hang out of that one. I don't need to add a ton, but I don't mind having some exposure on Google. What's the upside here if we get to all-time highs? 12% return on capital. It's not bad. If I put a couple $1,000 on Google, we get to the highs, I'll make a few $100 return. It's not the best allocation of capital, but it's not the worst. Meta, fresh highs on Meta here. Big rip here the last couple of days. I'm not chasing this thing. I just have some income trades all the way down here. This is another 111 for $1.80 credit. I will just wait. I mean, and honestly, like doing some of these, not really. It's kind of defined risk, but it's an income play where I can make $1.50 to $3.50, and I do that 3, 4, 5 times a year. Make a couple $1,000 per account, and I don't really have to ever own the shares. But the reality is, if we ever came back to, let's say that we have a fresh breakout here, we pull back into these moving averages as these are trending higher. I'm just looking to see if I can buy a dip. So I can obviously trade options. I can just dollar cost average with partial shares. I may not have enough to control options like 100 shares. That'd be pretty pricey even with a portfolio margin account. That'd still probably tie up 20 grand or so. So even if I just did a dollar cost at $1,000 or $2,000 and level myself in a couple of times, I'd be okay with that. Microsoft, I'm still long. Got some income trades, got some debit spreads, credit spreads. Netflix back up towards these recent all-time highs. Same thing here. If we get a dip or a pullback, I'll add some more exposure on Netflix. Nvidia trading near 140. I'm looking to see a price gain at 141 this week. 349 on Tesla. I'd like to see a 300 to 270 window hit. If there's a pullback on Tesla, add some exposure there. Berkshire Hathaway. Oh, fudge, man. What a nice rejection. I'll probably do the same thing on, if we go range high to range low, I'll probably add some Berkshire Hathaway exposure. I do wonder, I mean, if METU, no, you had me at double leverage. No, I'm not trading it. It's nothing. I can't buy and hold METU. It's like if you want short-term gains, I don't know. I'm just really skeptical of everyone that's playing the leverage ETF game or the leverage instruments game. Just be careful, because at some point, if there's a pullback, look, if Meta has a 5% pullback, there's 10% in METU. Same thing on Nvidia, same thing on MicroStrategy, same thing on everything. If you're leveraged, it stings twice as bad when you're wrong. So it looks great in a bull market. I still don't like holding them. So no, I'll take my chances with Meta. SHY, we got some bonds. 10-year yield is up about 1% today, 0.91. Still going to keep a close eye on this one. 30-year mortgage hasn't changed at all since we had the September rate decision. It's up 70 basis points. We're sitting at 6.81. China-wise, pretty flat. JD's at 37. I think I rolled. I added some covered calls this week on JD. I think I kept him at like $38.50 or $39. Let me double check this one here. I rolled it to. I've got 500 shares and I have it covered at $38.50. So a little bit of growth potential there, and that's out to December 13th pre-Fed. Also have some pretty good looking naked puts, 27, 25, and 23. So if I take ownership there, that would be okay. Those are in profit. I'm still looking at trying to flip and repair the actual stock itself. The other one I'm watching, Alibaba and Baidu, trying to repair a couple. I have some shares of both. They're just Baidu, I think I have a bit more exposure on. Fundamentally, I like that one better. And just trying to do a repair. We'll see. So, all right, that's top down. How's everyone's day? Decent. Pretty active day. 49 trades on the day. That's actually pretty quiet for me. Usually I'm close to 100 plus trades a day. But yeah, overall pretty quiet. Market's pretty chill. P&L on the day. Pullback in Ethereum. Big move in SLV for me. Another nice move in Barclays. That's BCS. TEVA is up some net profit. That's a pretty big jump. Philip Morris looking to get that one called away. That's a big chunk of my portfolio for gains, $85,000. AT&T up to some. We poked some highs today at 24. So I'm going to continue to ride some AT&T up towards like maybe $27 to $28. CENX, that's an aluminum play. That one's looking pretty good for full expiration by the end of the year. BITO have some profit. Silver futures, oil futures, NVIDIA looking just fine. So yeah, all in all, not too bad. We shall see. All right. Nice. Papa John, 5 trades, all winners. Good stuff, man. Yeah, it was a good day for that. Good trade, man. Good trading. Okay, so I've got about 15 minutes before I jump into my next webinar. Let's see. Okay, so 4 p.m. coming up in 15 minutes. Have a little liquidity level double up alerts webinar. I'm doing that just Han Solo style, and then we're going to lead right into a masterclass at 5:30. Setting some good expectations on the class, getting right out there, getting our hands dirty into the trades we have this week. Currently in the alerts, we are sitting on a 79% win rate right now with a profit factor of 9.26. It's pretty darn good. We have 5 open positions that just started this week. So the service itself is already pretty active. I'm on the Qs. I'm on WMT. I'm on NVIDIA. I've got one on the SPY. Took a winner on the SPY already. That was a small one, but it was winner nonetheless. I will take it. SPY is at 603. I'm curious what this one is trading for. I think you could at least get your money back. Let's see what's trading for. Yeah, it's a break-even trade. If you didn't do anything with it, I saw this as high as like 24 to 25 cents today, which I know that might not sound like a lot, but when you take the trade at 12 cents and you make 24 cents, that's 100% return on risk. So if you take, 5 contracts, 10 contracts, it adds up just the same. That's a pretty good gain. So anyway, close it out earlier, and now I've got one out to Friday. We'll see what the market gives us. So far this week, it's been really, really quiet. This is 2 days of trading. So here's Monday, here's Tuesday. The low of the week hasn't budged. The high of the week hasn't budged. I wouldn't be surprised if, Wednesday or Thursday or Friday for that matter gives us something a little bit more directional on where we go. I'd say to the upside, if we go slightly higher, it's going to be low and slow. If we go lower, it might be a little bit more accelerated. We still have some gaps to fill to the downside, but I'm just wondering what would be, driving that lower. So hopefully just, solid and steady, maybe the jobs numbers. We have ISM numbers coming out tomorrow morning, and then we have non-farm on Friday. So, we'll see. Earnings this week are pretty light. I don't know if there's any, big market cap moves that are going to move the market. Probably not. So I would imagine it's all going to be about non-farm and then the inflation data next week, and we roll right into non-farm, then inflation, then the Fed on the 18th of this month. And once that establishes some type of price action or noise, wherever price wants to go, we're likely drifting towards the end of the year. So hopefully the market's not going to get crazy disrupted. We just see more melting up, and path of least resistance wins out, plus seasonality. New Zealand yen, I'm not doing anything in the yen crosses. I'm just being careful with them. So New Zealand yen, let me just switch the chart here. So there's some seasonality going on with the yen right now. I don't love this pair, but we have seen a decent breakdown of structure. If you're looking at, aligning some type of trend-based system, and we are making lower highs and lower lows, we could obviously start going after this August low. I just wouldn't be surprised if there is, a carry trade in the market. I don't know. I'm very cautious of this because I don't know if the BOJ has something up their sleeve right around the Fed on the 18th. So when we had the rate decision from the Fed on the 18th, I'm not sure if the BOJ is that exact same week. Maybe it is. And if that is the case, there could be like a really tricky double whammy there. So Wednesday the 18th, there you go. So I would be cautious on the yen pairs for this exact reason. Here is the FOMC rate decision and press conference with Powell on Wednesday. And then overnight, Wednesday to Thursday, here's all your tentative stuff from the BOJ. So if the Fed does something like, let's say they cut rates. Well, if the BOJ comes out and says we're going to hike rates, that could create a lot of late night volatility that I'm not going to be up trading. That's going to be, my robots are trading that. I don't want that exposure on the Japanese yen. So if there's, I don't know, I'm just trying to say like no funny business from the Bank of Japan. Makes sense. So I'm just a little cautious. If I'm trading anything with the Japanese yen, I would trade really, really small. I'm not making any sizable bets on the Japanese yen. I don't have a good pulse on what they want to do, so I'm not forcing anything on them. I wouldn't be surprised if this high to this low is still going to be some type of range trade, and price just goes for a while in between them, and then something bigger has to happen later for this thing to break out. So just food for thought. Okay. All right. I'm going to take a few minutes, wrap it up here. Webinar at 4 p.m. If anybody would like to join me at 4 p.m., you're more than welcome to. You're going to check out a little presentation on my double up alerts and liquidity levels. Let me see if I can find a link to it. Let's see here. Actually, I think I have it here in the chat. So here's an encore. Here we go. So if you'd like to join, here's a link if you're interested in joining me. So 4 p.m. double up alerts. And if you attend the webinar and you want to join the service, we're going to do a masterclass right after it around 5:30 p.m. Eastern time. And you get right into a 60-minute class and diving into the strategies. Alrighty. View on gold. I like gold. It's just I want some patience. Gold has been pretty much asleep at the wheel for 6 days and not much is happening. So I'm looking at gold to still have a corrective phase where we come back down to 25 or 2400. There's a lot of support in here, in my opinion. So that's where I'm looking for gold to catch a bid, would be about 2500 to 2400. Then I'm looking to reestablish some longs. When I say establish some longs, I'm looking probably 12 plus months out. So I'm really going to build like a longer term base Probably allocating about 5% towards gold and see if we have another, run to the highs. If that is a decent discount and we get back to all-time highs, let's say I get something around, 2450. Get back to the highs there. That's a 14% move. So it's not a terrible move. If we go higher than that, awesome. But I could see gold being in a bit of a range. I could see the markets themselves struggling to, have a 20% year like we did the last 2 years running. I don't know if we're gonna have a big old correction or not. I'm not as bearish, but we'll see what the geopolitical situation looks like. If tariffs are going to choke out the market, if the U.S. 10-year yield is going to rip higher, those things would be bigger concerns for me as far as being more of a bear in the market. Otherwise, I think things just are relatively calm. There's nothing too exciting. 2025 could actually be, I don't know, for most investors that are just shiny object investors, probably a boring year. But that could be a very good trading year for those that know how to generate income. So yeah, I like gold at a slightly lower level, 2,500 to 2,400. Same thing on silver, really well supported at 26. And I'm looking to establish some reasonable positions, medium long term, to stay long. Okay. All right. Taking a small break. I'll be back at 4 o'clock, and then again at 5:30 for a masterclass. All right. Thanks everybody. Thanks for joining for the final hour, and we'll see you in a little bit. Thanks. Bye.